So we have on the call today, we have Ian Tchacos, the Executive Chairman of ADX Energy, also Alan Reingruber, the Managing Director of Austria from ADX Energy. Paul Fink is going to be controlling the slides on mute from Austria, so he's on the call as well. But Ian and Alan, if I could just get both of you gents to jump on camera, and Ian, I'll get you to introduce yourself to obviously to everyone on the call, but obviously introduce Alan and also Paul if he's able to jump on webcam as well.
Hello there.
So we can see Paul.
Hi, Paul.
We just can't hear him. Alan, if I could just get you on camera as well.
There he is. What a good-looking guy.
There you go, Paul and Alan. So that's the ADX team from Austria, and I'll let you to do the leave you to do the introductions. But before I do, I'd just like to give you a quick rundown on what we'll be going through on today's webinar. As I mentioned, Executive Chairman Ian Tchacos is going to introduce some key members of the ADX team in a moment. And Paul, Alan, and Ian will be giving a presentation with a Q&A session to follow after that. Look, we've had a number of questions come through already since the webinar's been announced, but please feel free to keep sending in your questions via the chat platform in the question pane in the GoToWebinar control panel, or you can simply email them to me at alex@investorstream.com.au. Apologies for the croaky voice. Luckily, I'm not presenting today. You can also download a copy of the presentation by navigating to the handouts pane in the control panel. You'll be able to download the presentation and follow along there as the gents go through the presentation. A copy of the webinar will also be available on ADX Energy's website and social media platforms later today. But I'd like to throw it over to Ian, who's going to kick things off for us with those introductions. Ian, the floor is yours.
Thank you very much, Alex. And thank you to everyone for your dial-in attendance. The purpose of the webinar today is firstly to share with you some information in relation to our recently finalised licensing arrangements in Upper Austria. We're very excited about this. It's a very good extension to our position in the Vienna Basin with our Geiselberg and Zissendorf production. I'd also want to introduce you to our team. Paul and Alan are on the ground in Austria, and that's what's making all of this possible. They're leading a team of geoscientists and operations people that not only run our existing fields, but also enable the new ventures initiatives that we've got. So look, I'll start the presentation. Unfortunately, Paul's got a bit of an issue with audio, but also Alan will also chip in on the conversation. Paul, could we go to slide 3, please? Okay, we're just going through the disclaimers. All of you will have seen before. It's worth noting that some of the information we have. Thank you, Paul. We recently undertook an independent review of our Geiselberg and Zissendorf fields, and that was done by internationally recognised ERC. So look, our immediate priorities for the Austrian expansion are to enhance production from our existing Geiselberg and Zissendorf asset. There's a number of opportunities we can pursue there, beginning with behind pipe potential, which we feel that we can pursue with increasing oil price. Over the last year with COVID, we've really just tried to tread water because obviously investing at oil prices around $30 a barrel doesn't make a lot of sense. Fortunately, that field, it produces on a very, very flat decline. So I guess a lot of the decisions we would have made this year, we can make next year where we see increasing oil price. There are also a number of other opportunities that we have with infill reserves and appraisal opportunities that we'll talk about later on. And something you may not appreciate as shareholders is there are also some hydrogen storage opportunities as well as CO2 storage opportunities, which can potentially enhance the value of those fields. So I think what people don't realise is if you're in gas, you don't need to pivot. to get into decarbonisation. If your fields are in the right place, that's actually a natural extension of what you're already doing. The Upper Austrian Appraisal and Exploration Program, I mean, what's really important about that is it is a drill-ready appraisal and exploration portfolio. What's been really useful is having the people on the ground, Alan and his team, who've worked this acreage before, and there was already a portfolio, and all we've really had to do is high-grade that portfolio on state-of-the-art 3D and pre-stack depth migration. So basically, we're incorporating geothermal exploration into the program. What we see across the border in Austria, in Munich, is a very vibrant geothermal business going on there. It's not so well developed in Austria, but those very proven reservoirs extend into our side of the border, and that's certainly something that we'll be pursuing quite aggressively in conjunction with our oil and gas opportunities. We're also going to be pursuing farm outs. In fact, there are parties that have already approached us to be able to farm into this acreage. It's a pretty rare opportunity to be positioned for activities so early on, and we're hoping to be able to finalise farm outs fairly quickly in the new year and then move on to planning drilling. And again, Alan will talk a little bit about that, but certainly planning to drill in Austria is not the same sort of challenges that we see in Australia, the UK, and many other jurisdictions. In terms of production asset opportunities, we're very well placed. We've got the knowledge, the skills, and there are very highly complementary opportunities that we hope to be able to talk about. We've got the operatorship credentials both in terms of exploration and production, and they give us a great opportunity to achieve critical mass and acceleration of growth very quickly. And I guess the fourth element that is important for any company is funding, and we see good opportunities for farm outs. We're working with a number of parties in relation to acquisition finance for production assets, and we're also working on new equity sources in potentially more sympathetic markets, in particularly the AIM, where we could not only access UK investors but also European investors through Euronet. So look, asset position's important. Having new data is critical in our industry, but probably most important is local knowledge and relationships. And the other good thing that we certainly see in Austria is very good community support. A lot of people wouldn't recognise that Austria is a vibrant oil and gas community, but certainly we get very good community support where we operate. Next slide, please, Paul. Thank you, Paul. So that just shows you some nice photos. Obviously, what you see there on the bottom right-hand corner is acquisition of seismic in Upper Austria. On the bottom left-hand corner, you see a drilling rig, and up the top, you see our beautiful fields in the Vienna Basin. And on the right-hand side, you not only see donkey pumps, but you see a number of wind farms. And those wind farms are important because they're co-located with an existing field. It means that any hydrogen that it can be produced from renewables could actually be stored in our reservoirs. I think the other thing I get from this slide is that activity is possible. In many places on the planet, getting out and acquiring seismic, RAG actually acquired 3,500 square kilometres of seismic. Doing that in most jurisdictions is very difficult. Getting on the ground and drilling is also really tough. So why are we here? We see Austria as very much a rare breakthrough opportunity. It's been a two-company game for over half a century, yet it's a world-class oil and gas province. 1 billion barrels of oil have been produced and 2.7 TCF of gas, which onshore is pretty spectacular. In Upper Austria, we're dealing with a basin where there's 8 TCF and about 70 million barrels. The previous operator who was very active was RAG. That's the company from which we bought our first asset in the Vienna Basin. Due to their corporate strategy, they've decided to get out of E&P. They'll concentrate on their gas storage, gas transmission business, and basically they walked out of a very nice exploration portfolio where they've been very successful, and that's given us the opportunity to walk in. So it's a very unique strategic position for us. We've got 100% equity and boots on the ground in the Vienna Basin, producing around 310 barrels a day over the first 9 months of the year. And the other important thing is it does offer further exploration potential as well as geothermal potential in Upper Austria. We're only the third producer in Austria behind RAG and OMV. They've been there for a long time, so we're the new kid on the block, and we're now only the second explorer. So we are in a very privileged position. So for us, there are multiple growth pathways. Obviously, we've got long life production in our existing field. We've got very good production acquisition opportunities where we have great knowledge and great understanding, both from a personnel level and also very much so ministerial and technical levels. So that puts us in the box C. We've also got great near-field appraisal and exploration potential now in Upper Austria, and very complementary hydrogen and CO2 capture opportunities. So our goal for 2021, just through acquisition, is to try and get to about 2,000 barrels of oil equivalent a day, but we see more opportunities in a rising oil price through organic growth as well. So what you see is a summary of the position in Upper Austria, and there are a few things to note. First of all those red and green blobs are existing gas and oil production fields owned by RAG. Then you've got the yellow areas with lots of green blobs, little green blobs. Those yellow areas are our new appraisal and exploration licenses. And the green blobs are the multiple prospects that have already been identified on 3D. So what we're very, very fortunate here, because we've got a portfolio which historically has had a very high success rate in this basin. It's a balanced portfolio. You'll see that there are both low risk appraisal opportunities that are very close to existing infrastructure. And you'll also see that there are some that are company makers in their own right for an onshore opportunity. But really what's made all this possible is the existence of high quality 3D seismic, which has enabled us to hit the ground running with a portfolio of at least 10 prospects that we'd like to go after very quickly, but then a much deeper prospect and lead opportunities of over 70 prospects and leads. So there's a lot of running room here for us. So you can see that grey area. Also, what we chose from is about 3,500 square kilometres of seismic. So for us to get to this position in any other licence would probably take us 4 or 5 years. And just in the areas we've got probably at least 5 to 10 million euros. I can use as an example, in Romania, we've been there for over 5 years to be able to license 3D, and there we're talking about 100 square kilometres. And the cost of that 3D would be about $1.5 million US. So you can see what a unique opportunity this is. You can also see that there are a large number of proven independent play types, which is really important. There's lots of different things to go for. And the proximity to infrastructure means that potentially you can drill a well and be in production in 6 to 12 months. And again, other than the US, where there's huge competition, there's nowhere else that I know that you can actually drill and commercialise in such a rapid situation. So, Alan, you might want to step in and just explain a little bit about this. A lot of this was under your stewardship, so you might just want to talk to us a little bit about the historical success rate.
Hello, good afternoon. Thank you, Ian. Now I jump in and give you some background information about the historical oil exploration activities in Upper Austria and in the MOLASSE basin, which was carried out by REG. If you look at the graph on the left-hand side, then you can see that the first deep exploration well was drilled in 1955, and this well became a commercial success right away. Sorry. In the following 30 years, there was quite a lot of oil exploration activities, which led to several discoveries with field sizes in the range of 2 to 25 million barrels recoverable. After a period of exclusive exploration of natural gas and after the availability of 3D seismic imaging technology, RAG resumed oil exploration in the mid-2000s. And this was the time when I became responsible for the domestic oil E&P business of REG. And my team was able to double oil production volumes within 5 years, thereby delivering a reserves replacement ratio above 100%. This is the time period which is has this oval circle indicated. In 2012, we acquired the most recent 3D seismic survey in a predominantly oil-prone area of Upper Austria. And when the seismic processing was completed and first drilling projects were available to be drilled in 2015, at that time the oil price began to collapse, and in the same manner RAG's appetite for oil exploration. Nevertheless, we continued, or the subsurface team proceeded to improve the exploration project portfolio, which now brings ADX in a premium position to continue this exploration success story. And now ADX has the possibility to be successful right away from day one of its license award.
Alan, while you're here, maybe you can also just explain a little bit about the licensing conditions in Austria, which is really important in terms of, you know, how quickly we can get approvals to drill, and if we're successful in a location that's proximal to infrastructure, how quickly we could get potentially a production license to actually produce.
Thanks, Ian. Yes. Yeah, the license situation, I will give you more details on one of the following slides, but in general, Austrian licenses are based on a tax royalty regime, and the license terms are, I would say, that the license term has a period of 4 years, which is extended by another 4 years if you fulfill a minimum work program, and the commitment that relates to the license extension is depending on the size of the license areas, and is a multiple of an square kilometer fee that has to be spent within a 4 years period. So if you have as a company, if you have the license agreement fixed and active, you have to apply for each single well with a drilling approval. This takes around about 6 months from the first application letter to the final drilling approval and green light to start rig site construction and start drilling operations. So this is a very streamlined and a standard process how the authorities work here in Upper Austria and in Austria in general. So if you prove that you fulfill all the safety and health regulations and requirements, and if you have a registered rig company available for drilling services, then you can proceed in a quite fast and efficient manner.
Okay, thank you very much, Alan. Thanks. Next slide, please, Paul. Okay, so back one. There we go. Okay, so what that shows, that histogram shows, is I guess the range of prospective resources on a best technical estimate, and you can see quite a range there. In all, our top 10 prospects are approximately 42 million barrels. And they're the 10 matured exploration prospects that are ready to drill. What we're not showing there is quite a substantial also appraisal portfolio, which we'll also be considering in conjunction with these. So you can see some of the prospects are quite large, exceeding 10 million barrels, which onshore is very, very exciting. Company makers in their own right. The other very important attribute in Upper Austria is that the productivity of many of the reservoirs is excellent. 1,000 barrels a day per well is quite normal, and what you see here is quite a balance of both gas and oil in terms of opportunity. The good thing is some of these prospects can be quite shallow and very, very highly profitable, down to relatively small, if you like, reserve ranges, probably less than 2 million barrels, could be highly profitable in the case of particularly shallow wells that are close to infrastructure. But then that's also balanced with very large upside, and we've got multiple opportunities for tie-in to RAG's infrastructure, both for oil and for gas. Thanks, Paul. Next slide, please. Alan, you might want to talk to the infrastructure position, please.
Okay, thanks, Ian. Yeah, as I mentioned earlier, Austria is one of a few countries where the fiscal terms of petroleum production are based on tax royalty regime. So the corporate tax rate in Austria is 25% of EBIT, and the major part of royalties reserves refers to oil and gas production volumes. So there's only a very small portion of royalties to be paid for exploration rights and production rights. And so the majority of royalties depends on the Austrian import price, which is the basis for a royalty calculation. In case of oil, there is a floor at 15% up to a price level of $65 per barrel, with a sliding scale from 50 to 20% for prices between $65 and $95 per barrel, and the seal at 20% for price levels above $95 per barrel. So this is quite moderate, especially in case of high oil prices. There's, of course, a comparable royalty calculation scheme that applies for natural gas production, with a floor at 19% and a seal at 20% of the revenue stream. Now, some explanations to the existing oil and gas infrastructure. As you can see, the ADX licenses are located in close vicinity to oil and gas infrastructure owned by RAG. This is shown on the left-hand side of the slide. The oil gathering and processing facilities are located in two areas of Upper Austria, which is indicated by blue and red boxes on the map. Each of these processing centers provides infrastructure for oil, gas, and water treatment, like water separation units, like water injection systems, gas drying units, pipeline transport systems, and so on. And both processing locations have a rail cargo loading station available, which facilitates the shipment of crude oil to the refinery in Schwechat, nearby Vienna. And the schematic flow diagram below the map gives you a simplistic view on the infrastructure. On the natural gas side, which is indicated in red colors in the map, this is also accessible within ADX license areas. There's at least one entry point to the national gas transmission grid in each license, which gives ADX greater flexibility in marketing gas discoveries. The facilities are run and maintained by an experienced team of technicians. The facility surveillance and remote control is managed by a single dispatching team in a 24/7 mode. You can see this control panel in small photo inlay on the right upper corner. And what we know and what we have also in writing is that RAG is willing to provide this service for ADX once production operations commence. And it is also important to know that we are currently finalizing an infrastructure access agreement that grants ADX access to RAG's oil and gas infrastructure at fair and, as we think, favorable terms for ADX favorable terms. And this ensures rapid commercialization of discoveries and even for small-scale projects.
Okay, thanks, Alan. Next slide, please, Paul. I won't spend too much time on this one, but what that does show you is for varying reserve sizes or resource sizes, these are just indicative that you can have a very robust economics on a per barrel per basis. And this is based on, I guess, the discussions we've had with them, with RAG in relation to access to their infrastructure. So we know what infrastructure is going to cost. And obviously there's a long history in this basin about developing oil and gas reserves. So it is quite indicative of what can be done. But what is particularly interesting is that even quite small discoveries have the potential to be highly economic on a dollars per barrel basis. Next slide, please, Paul. Okay, so what we're showing here, and Alan, feel free to jump in at any time, is that there are already identified a number of, if you like, what we describe as oil appraisal opportunities. What you see on the map is basically an Eocene depth structure map, and these are reservoirs that are quite prolific and productive. The green blobs are RAG producing oil fields, and what you can see also the ADX appraisal and exploration opportunities. So you can also see them in the section below. But I think what jumps out at me is a lot of these look almost like field extensions. So it's relatively low risk, it's relatively shallow, and it's all relatively close to infrastructure. So it's very exciting, if you like, when day one you can get in and start to drill these types of opportunities, where if you're successful, you'll be able to tie in oil production, very, very quickly. So it is an opportunity to go from drilling to cash flow in a very short period of time. Alan, would you mind talking to this, because you've had a lot more experience in evaluating geothermal opportunities in Upper Austria, and maybe you could talk to this slide, please.
Thanks, Ian. Yeah, the MOLASSE basin extends from Austria to Germany into Switzerland, and the map on the left upper corner shows the MOLASSE basin in yellow color across these three countries. And there's quite a lot of geothermal activity in the area around Munich, but in general, the trend follows the deeper Malmian reservoirs that are very prolific and have temperatures up to 135 to 140 degrees Celsius. This allows to install and run electrical power generation, and also district heating, of course, which is the main purpose in the Munich area. But if you come closer to the Bavarian and Austrian border, there are two or three projects where electrical power generation is performed out of geothermal sources. And the nice thing is that we have in the applied license areas several prospects that target into these Malmian reservoirs, and not only for geothermal exploration, but also for oil and gas exploration. And this cross section on the left-hand lower corner shows one of the prospects that is called Oho, or Oberholz in German, and this is quite a deep well that could be either reused in case of a dry hydrocarbon drilling, or as a geothermal well, or could be a very prolific and a big size discovery for ADX.
Thanks, Alan. Next slide, please, Paul. Alan, if you don't mind, you could probably go on with this one as well, because you have some. You're involved in discovering Haidach, weren't you?
Unfortunately, I was not involved in discovering Haidach, but Haidach was the largest gas discovery by REG and is now the largest gas storage in Austria. And we are so ADX license area covers this prolific area, and we have several prospects within this license that are more or less analogs to this Haidach gas field. in a different stratigraphic setting and in a different structural setting. But in general, we are below the imbricated zone of the Molasse basin and below the Flysch Helveticum, which is the thrusted part of the alpine orogene. And below these thrusted areas, we know from other discoveries that there are very nice sandstone reservoirs in the autochthonous molasse, and this is one of the major targets that we want to follow and we want to explore and appraise in this area.
Okay, thanks, Alan. Next slide, please, Paul. Okay, so maybe if I could just wrap up. I think Upper Austria has got some very exciting investment attributes for us. The ability to be able to license for drilling very rapidly. There's a long-established oil and gas culture, and that ensures that we've got both regulatory and community support. We've got a very experienced technical and operations team on the ground who've been working obviously in the Vienna Basin, but also have worked previously for RAG in Upper Austria as well. Again, as we've spoken, a drill-ready portfolio of company makers and low-risk tie-ins on 3D seismic, where you see a historical success rate of nearly 1 in 2 is very, very rare. This seismic position has basically saved us a lot of time and a lot of money, and we're basically walking into a block with not only existing prospects, but in some cases there are roads and site locations for drilling already built. The availability of highly productive reservoirs, low to moderate drill depths, and high-value hydrocarbons. The hydrocarbons from Upper Austria, particularly oil, trades very close to Brent, around 5 or 6% discount to Brent. And that in combination with a good royalty regime means that we can have rapid paybacks and high returns. Obviously, oil price is going to factor in all of this, but I think soon as we see oil prices ranging up above $45 a barrel, then certainly a lot of the oil and gas prospects here will be very attractive. And I guess the other string to the bow is that we also have geothermal prospectivity that's very high probability of success and provides alternate pathways for growth. And as Alan said, we're very well advanced with if you like, a contractual commitment from RAG, where we'll be able to access their infrastructure at known unit rates. And we think they're very attractive and certainly make this exploration, even down to quite small volumes, very, very attractive. And then another important thing is that we basically, the acreage we've high graded has been what we can afford right now in terms of license fees and an upfront guarantee. But once you're in there, once you've got these blocks, you can actually extend your footprint and you can do that very quickly. And that's a great thing for us. So I think, look, I don't think it's without, we're going too far by saying if we're able to go hard at this basin, given the data position and the knowledge that we have, we are in a very rare situation to become masters of this basin. So what I wanted to do was just touch very quickly on our existing fields. I think from the discussion so far, you'd think that really all the significant opportunities are just in Upper Austria, and that's not the case. We've also been working very hard on Zisterdorf which we've spoken quite a bit about, as we mentioned probably about a month ago. We got a nice confirmatory developed reserves opinion from a third-party auditor. But we've also been working with new 3D seismic that we've been able to trade with OMV. This is new 3D, 20 years younger than what the field has been drilled and evaluated on in the past. And we've got very good results out of reprocessing. And it's not only enabled us to see, I guess, the existing younger reservoirs, the Neogene reservoirs, much more clearly, and potentially identify other, what I describe as development drilling targets. But the deeper floosh reservoirs, or the basic reservoirs on the other side of the Steinberg Fault, are ones that, you know, I guess have sort of teased us for quite a while since we bought this asset. I think it's worth noting that it's a reservoir that OMV has gone after, but probably RAG not really. There are some wells that have drilled into this in our acreage, and it is a proven producing reservoir. But when we bought this asset, we saw very large upside in terms of in place. But what's been really difficult has actually been imaging this particular reservoir on seismic, and we think that's going to change for us. So I think what you see there is in the top left-hand corner is the new ADX pre-stack depth migrated 3D, and what you see is the 2008 version, and it's like you're looking at a complete difference in terms of imaging and what we can see in terms of actually mapping events. So, you know, historically, it was very, very difficult to identify, structures and fault blocks in the floosh. That's really, really changed now. So you'll be hearing a lot more from us in relation to potential floosh targets that we could go on after. And what you'll see also on the right-hand side is a world trajectory which would not only enable us to go on one side of the fault and target the floosh, but also drill onto the other side of the fault and actually pick up very highly producing Badinian reservoirs on the other side of the fault. So what we see is a lot more to play for, both in the Neogene, the younger reservoirs, as well as the floosh, and really as 3D has been the big change in Upper Austria, this is also seen to be the big opportunity also in the Vienna Basin around our existing fields. All right, thank you very much. Obviously, you can see our email addresses. We'll probably have a shorter question and answer session due to some of our technical difficulties then, but obviously anything we don't get through, we'd also feel free to email us, and we'd be happy to get back to you.
Thanks, Ian. Great job on presenting at short notice. You've done a fantastic job. Now, you're right, we do have a number of questions that have come through. So the first one, we have a couple of corporate ones to start off with. The company does have a lot of shares outstanding. Are there any plans for share buybacks in the future?
Yeah, look, I think we're looking at the appropriate time to do that. I think both a share buyback or a reconstruction at the appropriate time is certainly something we're considering. I mean, as I mentioned earlier, we are looking at the possibility of a dual listing at some point in time, and that might be, the ideal opportunity.
And just regarding the company's cash flow situation, can you talk us through the measures that the company's doing to address the cash drain over the next year? Are you prepared to disclose the breakdown of the cost of current production and expected future production for either your Romanian or Upper Austrian assets?
Yeah, look, I am, and we've actually mentioned this in the past, so it's nothing new. When we got into the assets, we knew what the cost of production is, and obviously through our negotiations in Upper Austria, we've got a fair idea of what the cost of production will be there. And look, with people like Alan who've managed RAG's assets for quite a long time, we've got a very good knowledge base of what it costs to produce oil and gas in Austria. I think, what we've seen in terms of a cash drain has been an asset that we purchased, which probably, would have generated probably between 2 to 3 million euros in the first year of net revenue after just about everything, to the drop in oil price from, an average of around $58 in 2019 to below $30 in March. Now, obviously, we've been able to ameliorate some of those problems as a result of hedging, but still, it's been pretty tough going. So our strategy's been to kind of just minimise our expenditure. We did have some committed capex. We've got a new pipeline tie-in, which cost close to €1 million, and that's been really important because we see this field producing for another 10 to 15 years. So that was money that we had to spend. But look, I think we start to the cost of production is around $32 a barrel. In terms of the Austrian organisation, we're probably cash neutral at around $42, $43 a barrel, which is where we're at now. And at 45, we start to be able to, spend money on other initiatives. And I can't really comment on Romania at the moment because we're not far enough down the track. But we know what we're going to be doing in Upper Austria, and I think there probably around $28 a barrel is probably where we'll end up as a cost of production.
So just flowing on that, just so I can confirm, can you talk us through what production level is needed to obtain some sustainable positive cash flow to fund a modest exploration and capital development program?
Well, as I mentioned, I think the oil prices that we're seeing on the forward curve now and our current production. If we'd probably expect that we're going to go into a workover program to do some pump replacements and hopefully also open up additional reservoirs, which is behind pipe potential. And I think on average production rates around 300 to 320 barrels of oil equivalent a day, will be certainly covering our costs. Now, obviously, if oil price starts to move above $45 a barrel, then we start to look at more workovers. We start to look at the possibility of infill drilling, but it doesn't make a lot of sense when you've got reserves in the ground to be pulling them out of the ground at a relatively low oil price. So I think we can be a little bit more optimistic about oil price in the second half of next year, and then you'll start to see us start to be more active. But on the other side, we're also looking at production acquisitions, and the idea of the production acquisitions is not just to be able to sort of maintain where we are, but to be able to go really aggressively, and that's why we sort of set this target of around 2,000 barrels a day. If the acquisitions that we're working on should come to fruition, and that would give us a lot more flexibility to go a lot harder at what we see as a very rich, development, appraisal, and exploration portfolio. But look, don't forget, there are other opportunities in the portfolio which are not oil and gas price dependent, such as renewable projects in the Vienna Basin in relation to hydrogen storage or CO2 storage, and also geothermal, as Alan described in Upper Austria. So we've got multiple opportunities, probably more than one company can handle on its own. And look, that's the other side of it. We will be, we are in a good position with a team on the ground with data, but we will be inviting other companies in to assist us, particularly on exploration. because a lot of companies don't have these sort of opportunities.
You've almost stumbled right onto my next question there, Ian. Regarding Upper Austria, will the company seek to drill a low-risk appraisal or redevelopment wells first to ensure timely production? And then what equity percentage is the company willing to farm out, and for what range of commitment?
Yeah, look, obviously we're kind of assessing this as we go to some extent, but I think our strategy or philosophy is that the relatively shallow, low risk things that are close to infrastructure, which are very highly profitable, we'd probably try to drill ourselves, at 100%. And then there are, things like OHO, which are big. They've got their dual targets, and then we'd probably look at getting some help to drill those. But look, we think those sort of things are much better than usually than a 1 in 2. We've been in this game for a long time, and I haven't seen a lot of prospects like this that actually give you, I guess, 2 bites at the cherry. And I think that kind of, if you like, revenue support is or capital support is highly realistic, especially where we stand with data and where we stand with access to infrastructure.
And your European plans appear to be focused on exploration, which is a sort of a longer term play in terms of 15 to 30 years. Can you talk us through how that meshes with the EU stated political objectives of completely moving away from fossil fuels to meet Paris Accord commitments?
Well, I think that question is basically illuminates the problem that you normally have with exploration. It is, especially, I mean, historically the companies, focused offshore, where I'd say, 5 to 10 years is probably realistic. Sometimes 15 years from the point of view you pick up a license to the point you can realistically develop it. And that's why if we've done a pivot, where we haven't done a pivot on renewables, we've actually done a pivot to go onshore in a jurisdiction where you can be drilling wells in 6 to 8 months, and you can be producing those wells 6 to 8 months later. So that certainly shortens the time frame. But look, I mean, the important thing to notice is that, in Austria, we've had good support for both oil and gas. We purchased an asset. We're approved as an operator, which is no big thing. No small thing in Austria. They've been used to 2 operators for over 30 years. So it was a big thing for them to let a little Aussie company in there to operate an asset that's actually been producing, since the late 30s. And we've just been basically been able to negotiate over the last 8 to 12 months a new exploration and appraisal license. So I think the Austrians have very much demonstrated they're open for business. Not only that, but we've been able to secure a very low cost loan from the Austrian government, and those loans are only offered to what they consider to be viable businesses to keep them going through this, if you like, COVID interruption. So there's no way the Austrian government would turn around and say, oh, well, here's a loan, and by the way, we don't want you in EMP. So look, I think Europeans, unlike the conversation we have in Australia, Europeans understand that you just can't go from oil and gas to wind farms. And I think the other thing, people understand is that, gas companies are not the enemy of renewables. In fact, a lot of oil and gas assets will have a really central position in, if you like, a more renewable-based economy. And we've sort of described the opportunities that are available in Zisterdorf for hydrogen storage. We've been involved in discussions in relation to the EU wanting to fund locations for CO2 storage, because if we just keep on going on as everyone says, oh look, we'll just reduce our emissions, or we'll we'll introduce, we'll try to plant some trees where we're producing CO2. That's not going to cut it. We're actually going to have to do something more than that. And actually taking CO2 that's currently going into the atmosphere out of the atmosphere is the best way to do it. And we're ideally located for that. And then finally, you've got, as we mentioned earlier, we've got geothermal opportunities as well. So we've chosen Austria because it provides an ideal opportunity for transition. The oil and gas that's produced there is produced at with very low CO2 emissions. And what I think will happen is just the opposite. It'll become more and more difficult to bring, oil and gas from shoddy countries where it's produced with high methane, if you like, emissions. And actually, people in Europe will actually concentrate on oil and gas that's produced both environmentally and ethically, and therefore our oil and gas will have premium value.
We've had a couple of questions come through on the new exploration licenses. Does the new exploration acreage, in your opinion, now take precedence over the development of the Flush play?
No, not at all. I mean, I think obviously there are two different players, two different risks, but also two different evaluation processes. I think while Upper Austria is new in terms of an asset, it's relatively well progressed in terms of a portfolio, and that's really because we picked up the team that have already put the portfolio together, and what all we've done is try to high grade the portfolio. So in a sense, from an exploration perspective and appraisal perspective, there are a lot of opportunities there that are ready to go. What's going to determine the timing is going to be the timing of getting farm outs, because obviously we just don't want to be raising equity for exploration, but we're already getting a lot of interest in terms of from farminees. So if we can get some farm outs going, then that'll progress quite quickly. In terms of the Flush, one of the big advantages the Flush has got, it's actually you've got infrastructure around there in Geiselberg and Zisterdorf that has capacity of around 4,000 barrels a day. We're connected to the Vienna refinery, very low royalty rate of less than 1%. So it's a very unique opportunity. So if we can map the Flush out as we think we can on new 3D, that'll be a very exciting build opportunity there, which can just significantly not only add to production, but also reduce our unit operating costs. So they're two very different opportunities that will be influenced by different factors. But really what we're trying to do is build a portfolio of opportunities ranging from infill drilling in our existing asset, appraisal opportunities like the Flush, and very big company maker type exploration opportunities in Upper Austria. So I think we're really privileged in if you like, in the depth of opportunities. Our biggest constraint is going to be availability of capital.
So when do you expect to start drilling, and is drilling the new exploration licenses a high priority going forward?
Yeah, well, drilling's always a high priority, but I think I'm hopeful that we can get a farm in away very early in 2021, and if we can manage that, we'd be looking to be drilling certainly in the second half of next year in Upper Austria. And again, on the other side, if we see oil prices start to creep up over $45 a barrel, then there are some really nice opportunities that we'd go after, either behind pipe potential or infill wells at Zisterdorf as well.
So is the exploration license fee self-financed by the Austrian entity, and does the freeing up of that last €500,000 tranche of the Austrian local loan provide the near-term catalyst for firstly the license acquisition, but also the planned exploration activity?
Look, the priority for that €500,000 is we've got some more field capex, And then also we're getting into a workover program which will be starting the middle of this month for some pump replacements and hopefully also some if you like, additional production through behind pipe potential. Then we'll be looking at where we stand and what the timing is of paying. It's around 330,000 euros. We also have some other subsidies available to us from the Austrian government, so we'll be assessing that, and probably by mid-January you'll have a fair understanding how we're going to cover that.
And last question for us, Ian. Again, you've been a real fantastic source of information today with these questions. Due to the low share price and lack of cash resources, you recently restructured your $3.5 million Australian debt, if you like, which delayed repayment to 2021 and 2022. Based on current oil prices, do you forecast sufficient cash flow to repay these notes if there is no substantial increase in share price? And further to that, what are the near-term prospects for new financing, and how does this affect the Austrian exploration and development plans?
Yeah, look, obviously, when you're an exploration company, your finances come from a number of different sources. Now we've progressed to being a production company. Then, if we start to see oil prices averaging $45 a barrel, our life will change quite significantly, and that's where the trends are going. So I think the reason we rescheduled the loan repayments, and if you like, refactored the loan repayments in terms of a bullet in 2 years, as well as half of it being repaid, is based on fairly conservative assumptions that all we managed to achieve is the forward curve. Now, if you go and have a look at a lot of different investment banks and brokers, there's a far more bullish view on oil price, but we can't go on that. So look, if we see sort of $45-ish oil prices, then the reason we've scheduled the loan accordingly is because that enables us to have sufficient funds to be able to generate funding for loan repayment. In terms of CapEx, it really depends on what it is and what its risk profile is. If it, as I mentioned earlier, if it's high risk exploration, we prefer to do that. If it's we're talking about 5 or 6 million euros to go and drill a well, we prefer to do that with a farm-in, and especially if it's a large prospect, because people want to come in. They don't want to come into a new area to go and drill 1 million barrels. They want to come in and drill something that's going to generate tens and hundreds of millions of potential revenue. So then we see those as ideal candidates for farm out. Obviously, it is important that we also have access to equity. I think unfortunately, our plan, if it were not for COVID, is that we would have tried to get a dual listing in Europe. I mean, I think, while, we've got a lot of, very supportive investors in Australia, I guess a lot of people wouldn't actually recognise that Austria is even an oil and gas producing country, even though they've been producing it for nearly 100 years. So whereas if you go to the UK and Europe, the institutions are starting to look for something different. They're looking for opportunities where you can get on the ground, you can produce oil and gas, because anyone optimistic about oil price is looking for opportunities where you can get in and drill. And I think we're very fortunate in the sense that we have those opportunities where we can ramp up our programs, and we also have the opportunities where, because we're also having, if you like, funding brought to us for green projects, and so in parallel we'll also be developing our green projects. So look, there's different, if you like, opportunities where we're going to have to access different buckets of funding, but certainly that's going to be a very important challenge for us. And I guess one of the reasons that we've already, we took on a UK director, Edward Eniev, who's also had a lot of experience in oil and gas funding, and he's based in the UK, is precisely for this reason, because we see that funding is going to be the key challenge. I think we're very happy with our portfolio of opportunities.
Fantastic, Ian. Look, that's all the time we have today. I'd like to thank everyone on the call for firstly persevering with our technical difficulties, but also Alan and Ian for doing a fantastic job with the presentation, and Paul for helping us out with the slides as well, and also taking the time to answer some questions. We've got through a fair chunk of questions, which is really great. As I mentioned before, a recording of the webinar will be on ADX Energy's website and social media platforms later today. But Ian, before I let you go, do you have any final comments to leave with us today?
Yeah, I think the important thing is that, Austria just provides an extraordinary opportunity for us. And it's not just in oil and gas, it's also the countless other opportunities that come out of having, if you like, an asset base in a first world economy where you're not kind of struggling to determine, where regulations are going and environmental standards are going. The environmental bars are already high, and we're already operating profitably with very high environmental standards. So, we're not sort of out grasping, trying to figure out what's going to happen next, because I guess the future's already with us in Austria, and we're in a very privileged position.
Thanks, Ian. Well, that wraps it up for us today. Thank you, everyone, for joining us. And before I'll let you go, Ian did say before the presentation, we had a number of questions that have come through, but we've run out of time. So please feel free to send through your questions to Ian, Paul, or Amanda. Their details are on the presentation, or you can always send them through to me at alex@investorstream.com.au. Ian, Paul, Alan, again, thank you very much for your time today. Take care, everyone, and we'll catch you later. Thank you very much.
Thanks, Alex.